This is John Gilbert at Security First Asset Management with a weekly market update. Now, before we move into market news, wanted to remind everybody that August is our last month for our summer fun program, wherein you can earn points and redeem those points for prizes. And then as well, wanted to remind people of the ongoing quarterly referral drawings. If y'all have any questions about either of those, please feel free to contact Alicia at our office and she can give you more information. All right, now moving into market news. This week was an extremely volatile week for markets. Monday, equity markets plummeted. So all three major American indexes, the NASDAQ, the Dow Jones Industrial Average, the S&P 500, they lost more than 2.5%. This was a result of a worldwide sell-off which began in Japan, then spread to Europe, and then came into the United States as investors dumped their riskier assets. A surprise increase in unemployment and negative manufacturing signals were also contributed to the decrease in markets. So the VIX, or the Chicago Boards of Option Exchange Volatility Index, which is sometimes known as Wall Street's fear gauge, and so it measures expected volatility in markets. It notched its third highest level since recording began back in 1992. So the only two times that this fear gauge has had higher readings was during the 2008 crash and during the COVID-19 pandemic. So there was obviously a lot of fear and panic around this large drop on Monday in markets. So some reports claimed that this was the beginning of a worldwide economic collapse. There were cries for the Fed to call an emergency meeting to lower interest rates before their scheduled September meeting. There were also suggestions that the Fed should have more sizable rate cuts during their meetings for the rest of the year. However, it seems that a lot of these fears and a lot of the panic was largely unfounded, was perhaps a little bit of an overreaction because this terrible Monday didn't seem to have much legs to stand on. International and domestic indexes and stocks rebounded on Tuesday. Now, the markets fell slightly on Wednesday, not nearly as dramatically as earlier in the week, and then on Thursday, with a reassuring drop in weekly jobless claims, a bounce back rally began. The S&P even experienced its best daily gain since November of 2022. So when all was said and done, the stock market finished with just a modest change from the week. So from Monday to Friday, there was very little change in the market itself. So it's not nearly as rough a fashion as the headlines might have suggested. Now, market declines are never comfortable, and large ones especially can be very unsettling. The key to navigating these declines is making sure that you have a proper perspective. The word that comes to my mind is myopic, which means nearsighted. So oftentimes our first reaction in these situations is to see what is happening right now and panic, where often it is in our best interest to pause, to zoom out, to look at the bigger picture, and then we can make a rational decision from there. Now, if y'all have any questions, if you have any concerns, we invite you to contact us to schedule a review, and we'll be happy to talk about things and discuss markets and address some of the concerns that you may have. But thank y'all so much for tuning in. We hope you have a great day.